Hi everyone, my name is Sam Decourt and welcome to our June market update. Joining us today is PiFund's Chief Investment Officer Mike Taylor, as well as Michael Goltsman, who heads our Australasian Growth Fund, joining us from Sydney. Hi Mike and hi Michael.
Hey Sam.
G'day Sam.
So Mike Taylor, we'll start with you. It's been a pretty eventful couple of months. May was a very, very strong month for most world share markets. June has been a bit flatter, but there's been a lot going on in the news. What's been your assessment?
Yes, it's been a very fluid situation for all of us, really, trying to assess the potential impacts from various geopolitical events that have been going on the last 3 or 4 months. What's been an interesting outcome of all of these events, I guess, is that the market has become more and more resilient as time has gone forward with particular events. The latest one being with the escalation of the conflict between Israel and Iran. Of course, by the time this goes out, there'll probably be more information relative to what we're assessing at the moment. The latest thing I'm reading is that there's a potential ceasefire, which is really good news. But certainly the market is taking a very sort of optimistic or sanguine approach to most of these pieces of information. And by and large, if America and the rest of the Western world is continuing to consume and spend, then corporate profits hold up. And that's, markets are very unemotional and that's a bit of an oxymoron, but when it comes to profitability, they are unemotional and they focus on the numbers. And so if the numbers are still good, then markets will continue to rally. And, that's what we've seen. We're very close to all-time highs again, and the funds have been doing well.
Thanks, Mike. And you just returned back to New Zealand after visiting our London-based team.
Mm-hmm.
And I think you sent a note to staff the Sunday before, talking about a kind of feeling of optimism and banding together of the European nations. Can you give us like a really quick update on the feeling on the ground over in Europe?
Yeah, I guess with the tariff announcements, which are almost kind of yesterday's news, but they will be coming back around very soon. It's caused the European nations to, club together, bit of a club med, in forming a bit of a united front, I guess, for the European Union in terms of the trading with the US. So the Europeans are also spending a bit more when it comes to from a fiscal aspect, particularly Germany, which has loosened its fiscal constraints in terms of its allowing for a budget deficit. So that's generally positive news for the biggest economy in Europe. And even in the UK, with the analysts and economists that I met with, felt that the UK economy was quite close to a sort of a rebound in consumer spending. So overall, pretty positive and upbeat from that region, despite, ongoing conflicts.
All right, over to you in Sydney, Michael. So obviously you're the portfolio manager of the Australasian Growth Fund, which was PI's first ever fund, which launched nearly 18 years ago. Really good performance over the past year to the end of May, up over 30%, and averaging over 18% per annum for the last 3 years. What's driven this performance, Michael?
Look, I think to be simple, I mean, we've tried not to be bogged down with what's going down in the news. I think it's quite easy to get paralyzed with fear when you do that. And to us, we've really stuck to our process and been focused on bottom-up stock selection, really trying to find and invest in those businesses where the market has either mispriced some positive structural trend because of a short-term wobble, or there've been changes to management and company strategy where the business model gets fundamentally misunderstood for a period of time. I also have to say the good thing with the ASX is that we have some exposure to some great businesses which sell into global markets and are exposed to some really great structural trends.
Michael, one of the companies that I see in the fund which has been doing really well is Catapult. And it's a stock that we've seen at PI going back a long time. What's caused the big run of performance in that company over recent kind of year or two?
Yeah, so so Catapult's a great example. So we reinvested in that a few years ago, and just as a background, Catapult's a sports wearable technology business. It allows sports teams to measure how their athletes are performing and training. The business a few years ago had a pretty big change of strategy where they went from a capital sales model to a subscription model, which meant that their revenue base would become more recurring, but in the short term, it would lead to a small decline in revenues. They also released new video products, which added costs. And at the time, this led to a degradation in cash flows, which the market didn't like. We tried to capitalize on that a few years ago and bought in. Because underneath, with all these changes, I mean, we assessed that the business was going to be much, much stronger in a few years' time. And if we fast forward to today, we're seeing the benefits of those changes. We've had consecutive halves of growing earnings and cash flow, and in turn, the share price is starting to reflect that.
And I see that one of their new kind of service lines is in Formula One, which is obviously a big growing industry, as everyone knows.
Yeah, correct. They're the premier video analysis tool for Formula One teams, and they've extracted that technology and now tried to apply it to all their other sports. So yeah, you're seeing that video analysis tools kind of coming up in soccer with their match tracker program and also now into the NFL. So it's quite an exciting growth story.
Very good. Well, thanks for joining us, Michael, and thanks, Mike. And most of all, thank you everyone for tuning in, and we'll see you next month. Thank you.
Thanks, Sam.